Welcome to the video, folks. Anthony Speciale here with Hawkeye Traders. Going to be talking today about identifying areas in the market that were previously resistance, now newly appointed support, and confirming that theory by utilizing volume. Okay? Many of you may go, well, how the heck are we going to do that? Well, we're going to break that down in this short video. I'm going to walk you through what the price action's done, what the price action's currently doing, and we're going to talk in depth about how volume in itself can be a confirming tool to give you foresight to what is going to happen in the coming days, weeks, even potentially months. Why is this vitally important? Guys, if you can identify these areas, you will have the opportunity to enter with the lowest risk and the highest probability of placing a successful trade. So before we go too deep, I basically want to remove my hand-drawn analysis from the screen so that you can see what it is that I actually trade with. And I mean this when I'm day trading, swing trading, position trading, even scalping, right? I don't need more than volume and price action, because with those two things, I can then come in, perform my own analysis, right? Employing my own personal trade plan and create a thesis around what I believe is not only happening, but is likely to happen next. Why is this so important? Because every indicator that you place on your chart, almost every indicator, is a lagging indicator, meaning that that lagging indicator is not going to plot until price has already done what it has done, right? It's taking a calculation of what's previously happened, right? Where volume and price action, particularly paired together, can give you an inkling to what's going to happen next before it even happens. If I could tell you to study one specific component within the volume and price action realm, it would be reversals, okay? Because you can nail them with a great deal of accuracy if you can just put together some extraordinarily simple price action analysis and then just look for these potential areas where reversal may occur. Okay? One of two things is going to happen. You're either going to have little to no interest, right? And there's nothing that's going to confirm a follow through, or you're going to have this excessive amount of interest, which can also accurately confirm follow through or reversal. So let's dive into this. We're looking at Bank of America, ticker BAC. This is a daily chart. We're looking at approximately 6 months worth of time. So this is fairly recent. And we're going to dive into this, specifically honing in on the opportunity to buy very low at a high predictable reversal area. So I'm going to reapply my analysis, which I'm going to describe to you. Okay? I have a very simplistic trend line here running through the bottom. I have a low. I have one. So this is touch number 1, 2, 3, 4, 5. I have 6 touches on this trend line that I have carefully drawn and considered exactly where I was going to place it. Okay? Minimum 3. Okay? 2 can start to give you an idea, but a minimum of 3 is most desirable. So I have double that in touches. So I basically have one extending line. All I did was duplicate this line, or on TradingView, it's called cloning. Right? You hit clone, and it will give you a second line identical to the first one that you had printed. And I basically just put that at the very top in between all these lows, okay? But really what I'm interested in is what price does when we revisit this low. Now you could see we had a range of highs here, right? Stemming from the first touch of this trend line. There's the second touch. We had another high placed here that didn't quite penetrate through. And then ultimately we broke through, settled above, retested, and then went on to test the upper channel structure. What am I interested in here, right? I'm interested in this candle specifically, and I'm going to explain to you exactly why. Okay, so I'm looking at this candle here specifically on the missed earnings report. I am specifically dialed into that ultra high selling volume down there. I want you to notice price did what? It pulled back into, right? We were already starting to sell off, placing lower highs and lower lows, but it pulled directly into two specific price areas that are very meaningful to me. This lower channel line, it tested, and it also tested what was previously resistance, these highs, now newly appointed support based on this candle right here. We closed above, retested, closed above, came a little short of retesting right there. So to me, I have an area or a zone that was previously resistance, which should now be considered newly appointed support, and I have a upward trend line, which is part of the formation of a channel structure that has now been touched for the 7th time. It was touched as price pulled back into support on a channel line that should be considered ascending support on ultra high selling volume. And I want you to notice that the candle closed probably somewhere in the 60 percentile of the push down, right? 65 percentile roughly of the push to the downside. And there was zero follow through. Why? Well, price pulled back, we get the earnings report, ultra high selling volume. All the sellers are essentially being absorbed, right, by the buyers at support. You could see where we settled. We never even retested the wick of this candle. The next candle opened, pushed higher, and pushed us right back into the prior highs, regaining that upward channel structure again. All I need to know is, am I on ultra high selling volume pulling into known proven support, and am I experiencing all this selling volume and this candle not closing in the bottom 90-95%? That tells me with a great deal of certainty, because I understand the relationship between volume and price action, particularly a volume climax to the downside that was being absorbed by buyers, caused a near perfect reversal. Near perfect. In fact, we never even retested the closing. We gapped open here on the next day and took us back into that upward channel line there for about 9.3% over a period of about 4 trading sessions. How valuable would it be to you to be able to not only identify, but interpret and execute around understanding reversals like this by simply understanding the relationship between volume and price action? To me, it's a no-brainer. Why? Because I can do this on a daily chart, a weekly chart, a 15-minute chart, a 1-hour chart, a 5-minute chart, a 1-minute chart. Okay? Timing is irrelevant. So if I'm day trading, swing trading, or position trading, I can manifest all of that by simply understanding the relationship between volume and price action. So I invite you to learn more about this theory and accessing our Hawkeye printing tools here by clicking the links below this video, consuming the content, reaching out to myself or my team so we can answer any questions you may have, so you can approach the market through volume and price action mastery. God bless you guys. I'll see you in the next video, and I hope the trades that you place go in your favor.